G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're taking a look at Bitcoin. We're having a look at the close-up action here, the 1 hour chart, and how we're falling out of this wedge, currently retesting this wedge. What will it mean if we get rejected at this point? That's one of the things we're looking at. We're also going to take a look at the macro view. We're looking at the DXY, we're looking at the S&P 500, the Seng index, and a few other things. So let's get stuck in. All right, so first of all, what I've got on the screen here is the 1 hour Bitcoin chart. Now, if I zoom out a little bit just to give you some context about what we're looking at this particular rally that we've had over the last couple of months. And right now, Bitcoin is sitting right here at about 42,200. You can see we went up and down inside this horizontal wedge. We have fallen out of the wedge and now we're retesting. So generally at this point, Bitcoin might either re-enter and this is just a fake out, or it could go down further again. So we'll have to see how this one plays out. Now, moving across to the daily chart, we can see where we are. We've bounced off the 100-day moving average. So we're below the 20, below the 50, below the 200, and we're at the moment right in between those and the 100-day. And you can see we've bounced off it once, and now we've bounced off it twice. So it's potentially a double bottom where we could go further up again, but we are finding resistance heading back into that wedge. Now down here, this here is the 100-week moving average, and this is something I'm keeping a very close eye on. You can see that it's also intersecting this downtrend line that we saw between May and July. So currently the 100-week moving average is at about somewhere close to $24,000 roughly. So I am expecting, or I am anticipating, that if we do go down, that might be the moving average, as well as this trend line right here that we do end up bouncing off. Now, jumping to the weekly, this is very interesting because we can see that on this rally, we had 5 green weeks. We had a kind of neutral week here, and then a 6th green week in a row. And now on the way down, we've had 2 really big red weeks with one small green week and another small red week so far. But the fact that we didn't have much resistance on a weekly time frame, this was all green on the way up. And you can see over here, it was all green. And down here, it was all red. There is a high likelihood that we do have some sort of drop down to some range down here somewhere, all in one go, as you know, we've got this spot here, we've got this spot here, we've got this spot here. These are just solid candles of the same color. Now, we know that Bitcoin is somewhat correlated with the stock markets. And what I've got on the screen right now is the S&P 500. And we're looking at a monthly chart, and this shaded area is the 2.5-year moving average. And we can see that these here are the correction points when we've bounced off that 2.5-year moving average. Now, this generally happens every 4 years. That was a 4-year jump there from September 2011 to around September 2015. This here was about a 3.3-year jump from that point there to around December 2018. And then we had the COVID crash right here, and we're currently about 2.8 years into this next cycle. So it's currently shorter than these 2 previous ones. And Bitcoin has always peaked around the middle of these cycles. So despite the S&P 500 having a correction, and it could be still in a correction, if you look at the size of it on a monthly scale, it doesn't look that bad. It's not as big as these corrections down here. Now, it could turn into such a correction, but at this stage, it's just something that is quite normal. You can see that we had a similar correction right there. We had a similar correction there. We had a similar correction there. You know, it happens several times a year. So this is nothing to be too scared about just yet. It just depends if this comes down further. Then if that's the case, that could really bring crypto down with it. But if it's just a small correction like we've seen before, maybe it bounces back up again and does some sort of W shape and then continues on. So we'll have to watch this one very carefully. Now, something else to keep an eye on here is the Seng index, which is this blue line here. And you can see that when overlaid with the S&P 500, they do generally correlate. And you can see right here, you know, we've got a bit of a bottom there, we've got a bit of a bottom there, We've got the COVID crash right there. If we zoom out again, that was the great financial crisis back then. There was another correction back then around that September 2011 mark. And these blue dotted lines here, this is when Bitcoin has peaked. So there's been a peak right there, right in the middle of these corrections. So Bitcoin never peaks during a correction of a stock market. Right here, this was the 2017 peak. And currently, here around April, this is the 2021 peak so far. So at the moment, the Hang Seng is going down and the S&P 500 has been going up, but we have turned around slightly at the moment. Now, this divergence, given that in previous times they've both corrected at the same time, it does seem strange that the Hang Seng is going down and the S&P is going up. So there is a possibility that the S&P does continue on and correct at the same time as the Hang Seng index. So we'll have to see how this one plays out. Now, checking out the DXY, the US dollar index, we can see that it has broken out of this double bottom W pattern right here. So this is very bullish for the US dollar and it's potentially bearish for Bitcoin. But at the moment, Bitcoin has still held up right here at this 42,300 mark. So it's not really moving anywhere just yet. And the last thing I'd like to show you right here is just how Bitcoin is comparing to the previous cycles. Now, what I've got on the screen here, this is a daily chart, and the pink shaded area is the 50-day moving average, and the green line is the 50-week moving average. So on this particular one, I've made it 350 days, which is 50 weeks. Now, what you'll notice is right now we are currently below the 50-day moving average. And what we've typically done on these cycles is that we go below the 50-day moving average, like here, we're underwater, and then we go above it, then we go below it, and then we'll eventually go above it again and below, up, above and below. We do that constantly, and I'll show you quickly through the history just how that's played out. So let's go back to 2013. Let's have a look. So we are above, now we're below, we're above, now we're below, we're above, we're below, and it just constantly plays out that way. Now, if we go to 2017, you can see it again. We're below, above, below, above, below, above, below, above, below, etc., etc. So there we are in 2019 and 2020, the same thing again. So right now, we're below it, then we're above it, now we're below it. So at some point, we will turn around and go above it again. However, something else to keep an eye on is the 50-week moving average, this dark green line. So you can see that we're currently above it, but going back through history, and I've circled these same sections in the previous cycles, when we bounce off it, like we've done here, and we go up, and then we come back down. So you'll notice, let's have a look at all these cycles. So right here in this is actually 2014, we're below the 50-day, and we're above the 50-week, but we eventually go through it. So once we bounce off the 50 week, and then we go through the 50-day, and then through the 50-week. Okay. Now let's have a look at 2017. We did the same thing again. We bounce off the 50-week right here. We go up, then we crash through the 50-day, and then we go through the 50-week. Now, in this case, we actually came back and back tested it, got rejected, and then went back down again. And then it's interesting, we go up and we actually retested it again for this next dead cat bounce before going back below the 50-day. So this is a pattern that we've seen play out over and over again. And the same thing again in 2019 and 2020, you can see above and below, but we bounce off the 50-week right about here. We go up, we go through the 50-day, and then we bounced off the 50-week, but then we come back down again and capitulate. So it's a very common pattern, and it's happened every single time. So if we are to follow the same pattern again, we should go below the 50-week, okay? And the 50-day moving average might look something like this. And then we should go above it again, and then below it again, above it and below. So this next dead cat bounce, we'll have to see where we go. If we follow exactly what happened in 2018, then we could get rejected by the 50-week moving average, but there's no guarantee that exact same thing will happen again. But the moving averages are definitely worth keeping an eye on. So that was just a general observation about what's happening with Bitcoin and some of the other markets at the moment. We just have to be patient. We can see that at the moment we're still not back in this wedge, which is still looking fairly bearish. But if we get back in the wedge, then anything can happen. But given what's going on with the outside markets and the fact that the DXY is actually very bullish at the moment, it's not really looking good for Bitcoin in the short term, but we'll have to see how it all plays out. Anyway, I hope you enjoyed that content. You can follow me on Twitter at TechnicalTimCR1. And until next time, I'm Tim, and cheers.